get the wall a little bit higher, and it just makes sense. I know everybody says, but the economy's strong, but inflation still isn't a target. Like, they're kind of talking around the issue, which is inflation went from 9 to 3. The Fed knows 5% plus Fed funds is in the wrong spot if inflation even is at 3 or below 3 on PCE. And therefore, they want to do the optional cuts. It's the only way you can punctuate a tightening cycle.
That's what some say now, is like inflation is at the level now where they should cut. That's an argument from those who are
and they more or less
cuts.
have endorsed that. I mean, in their outlook, I just think that they're trying to be either a little bit too demanding of the data or being a little too cute or saying, what's the risk of waiting? And it's true. What is the risk of waiting? Market's 1% off its high. Credit spreads are great. Jobs are still growing. So it's true. There hasn't been any pain associated with it. But I think they want to get moving in that direction just so that the perceived risk of staying too tight too long is not as high.
I mean, you noted the market did move a bit on
yes,
Bostic.
It did twitch higher.
That you suggest.
It twitched higher. Look, we're definitely wait and see mode. We've been kind of churning around for a couple of weeks now, and it makes sense that we really, really do need to see this number. There's not that many more inflation numbers to come before June. I also think it underscores if it's a genuinely cool number and there's no, but look out for this other element of it that makes you more concerned. The market it'll have a relief rally attempt at the new highs.
JP Morgan, going through the scenarios this morning was very much that.
The question
very
to me
cool
is whether real buying follows whatever pop we get, and that remains to be seen.
All right, so we're watching the S&P just going positive. Dow's way off of its lowest levels too, but we are watching Amazon, Kate Rooney, to see if we get this record, and maybe it too will turn around. As a matter of fact, it is now in the green.
Yeah, that's right, Scott. Yeah, it is approaching this record close. The number to beat for Amazon, $186.57. Not quite there, but we've got a few minutes here until the close. There has been this wave of optimism lately around Amazon. Handful of price target increases and calls reaffirming it as one of Wall Street's top picks. The average price target now $209. That's about 13% upside to where it's trading now. 95% sell-side firms have a buy rating. There are 3 holds, no sell ratings on Amazon. RBC calls it one of the internet's largest true alpha dogs, talks about scale and e-commerce combined with that cloud business, AWS. Jefferies, for its part, says still plenty to be excited about. Plenty of runway ahead for Amazon. Top pick for Morgan Stanley, too. Points out better cost to serve, more efficiency, and more upside there, plus Prime driving some of the recurring revenue and cloud adoption, plus advertising potential. That's the bull case. Risks, they're there, but any AWS decline, that's Amazon's golden goose. Any weakness there could be seen as a big weight on the stock. Any sort of e-commerce competition from Shein and Temu, which is one of the downside risks as well, Scott.
All right. Kate Rooney, thank you. We're about $1 away from that new closing high on Amazon. We'll watch it closely over the final 3 minutes or so as we turn to Courtney Reagan. All right. Teens are fickle. We know that. But what are we learning today from this Piper survey?
Yeah, interesting, too, what Kate had to say there. They still love Amazon far and away. Their number one site for shopping. Shein and Temu sort of on the list, but way far behind Amazon. Twice a year, Piper Sandler surveys teens on all sorts of topics. But retail brand preferences, that's always key. And it actually does change its analyst ratings. It moves stock. So today's release is no exception. Let's go through some of it. Overall, teens report they're spending 6% less than they were last year, but 1% more than they were in the fall. And 65% think the economy is worsening. And while Nike is still teens' favorite brand for apparel and footwear, it's lost share with them for the first time in years in this survey, actually. Piper Sandler says the survey gives it more confidence in demand trends at On Running, Deckers Hoka, and Birkenstock, but caution on Nike because of what we just talked about, VF Corp, Crocs, and Lululemon. And while beauty spending is at 6-year highs, there are areas of moderation. Still, Piper comes away saying, look, we remain bullish on e.l.f., slightly more cautious on Ulta, no longer a top idea, but we still remain buyers there, which is interesting after what we heard from the CEO saying that he's starting to see this deceleration more broad and earlier and potentially more intense than he had anticipated.
Appreciate that. As always, Courtney Reagan, thank you very much. Mike, I'll turn back to you. We've had the 2-minute warning, got about 90 seconds to go here. Some interesting buying in some of the mega cap tech names as we approach the end of the session today.
Yes, there has been. It's interesting because a lot of the dynamic today, in the absence of a lot else going on fundamentally, is a selling of the winners and then a migration into perceived either laggards or defensives. So you have had Apple qualifies as laggard. And then NVIDIA, I think people are concerned about a little bit of a breakdown, a little bit of this sense out there that maybe they're kind of lead might be diminished. You have Google going elsewhere. You have Intel making noise. I don't think anybody thinks that story's changed, but the stock ran so much. And so that's the biggest single weight on the S&P 500. I did find the interesting profit taking in the year-to-date winners. A dozen of the year-to-date winners earlier in the S&P 500 were almost all down like 2%.
Uber,
that
JP
tells
Morgan.
You, yeah,
I'm looking at those specifically.
Supermicro. That tells you, in part, people are raising cash. Maybe they're paying their taxes. Maybe we can write that off. Or maybe it's just portfolio pruning ahead of CPI after we've had, this really nice run. And we want to know whether this is just a wobble or the start of something a little more.
All right. Well, Dow's trying to work its way to the flat line, too. But S&P's positive. Looks like it's going to go out that way. NASDAQ as well. And it all points to tomorrow morning. Cannot wait for tomorrow. Let's go to overtime right now with Morgan Brennan.
Well, there you have it. A gain for the S&P, albeit just barely. It looks like 52.10 is going to be the level there. The NASDAQ turning higher in the final moments of trading as well. But the Dow just below the flat line. Well, major averages closing off the lows of the session. That's the scorecard on Wall Street. But the action is just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan. John Fort is off. The Dow falling for the sixth time in 7 days as investors await a key reading on inflation tomorrow. Meanwhile, earnings season is about to kick off. Coming up, Golub Capital CEO Lawrence Golub on what trends from private equity-backed companies are indicating about the outlook for Wall Street earnings. Plus, NVIDIA shares getting hit hard as new competition enters the AI chip market. We will discuss the potential winners and losers in this fast-growing race. And let's get to today's market action with our market panel, Charlie Babrinskoy of Ariel Investments and Adam Crisafulli of Vital Knowledge. It's good to have both of you on. Charlie, I'm going to start with you here because we saw bond yields come off a little bit here. We saw stocks basically middling, at least into the close. But commodities have, in general, maybe ex-oil today, have been pretty strong as well. What to make of some of these different cross currents and dynamics, and where do we go from here?
Well, in general, lower interest rates are better for some commodities, particularly gold. I think there is a sense that if we got a little bit of interest rate relief, we'd get a little bit of stronger economy, particularly in housing. That's good for copper prices. That's good for demand for oil. A better economy would be good for China, which obviously is a big consumer of commodities. And fundamentally, I think there is a sense that maybe people don't want to have all their money in the stock market, and having in some hard assets like timber and Iowa farmland and gold is not a bad place to be. The stocks haven't done as well as the underlying commodities. The underlying commodities have been very strong. The stocks haven't really kept up. So we do think there's some opportunities there.
Interesting. We don't talk about timber very much. So I'm going to dig back into that with you in just a moment. But first, Adam, we've got a crock pot of considerations for investors as we do await inflation data and bank earnings later this week. You got firmer U.S. growth backdrop. You got hawkish repricing of the Fed pivot expectations. Higher commodity prices, we just talked about, higher break-evens, higher sell-side S&P 500 price targets, increased downside hedging, breadth improvement, and potentially some reflationary leanings. That's just the list I'm working off of. What to make of it?
Yeah, there's a lot of moving pieces, like you just said. I think it's interesting if you kind of read the tea leaves over the last several weeks. You do have a lot of potential tailwinds on the industrial, on the manufacturing front. So you've had a string of positive economic numbers out of China. You've seen the price action in commodities with oil and gold and copper. The USIS manufacturing ISM was decent as well. And then on the flip side, you've seen a number of negative data points with regards to the consumer and retail spending. And so potentially there's a bifurcation happening. And it'll be really interesting to see within the CPI tomorrow if you really start to see a weakening in services inflation and shelter inflation, because it's incumbent on those two categories to start to move lower if the CPI and the PCE are really going to make that final move down to the Fed's target. So you are at this possible inflection point in the overall economy. So it'll be interesting to kind of see how this all plays out, not only with the CPI tomorrow, but we're right on we're right ahead of earnings season. The banks Friday morning are going to give us great insight into just the state of the economy, especially with regards to consumer. There's been a few storm clouds around consumer credit quality, especially at the low end of the consumer. So it'll be really interesting to kind of hear their perspective on how things are shaping up there.
Charlie, what matters more, inflation data or earnings data, especially as we are talking about diversification into real assets?
Yeah, I'm going to go with inflation data because the Fed just is stubbornly refusing to reduce rates to where they should be until they see a number that they're happy with. Just a very important data point on this is that Gene Fama at the University of Chicago came out with a study probably 40 years ago showing that the real rate of interest for the risk-free rate should be about 1%, and it had been for 100 years. And that means that with 3% inflation, we should have a 4% short-term one-year Treasury rate. We've now got an over 5% rate. So unless you think we're going back to 4% inflation, which nobody does, interest rates are too high. When they come down, which I think they will this year, it's going to be a real boost to housing stocks, to the ability of consumers to pay off their credit card debt, to finance their lives. So I put me down for interest rates being the number one driver.
Okay. Adam, do you see it the same way, especially since we do have a week that has a lot of Treasury supply hitting the market? And we do have, as you mentioned, CPI and, as Steve Leisman is arguing, PPI, which arguably is going to matter more to PCE.
Yeah, no, these are going to be crucial data points. You've already had a pretty aggressive hawkish repricing in Fed expectations and yields. So I think your risk reward is to the dovish side into the inflation figures, meaning that, I think it's going to be easier for the CPI to come up looking less hawkish than feared versus the alternative. And with regards to the Fed, keep in mind that there's a bifurcation happening among international central banks. So we have the Bank of Canada tomorrow and the ECB on Thursday, and both those central banks are going to have dovish forward guidance. You've had some pretty downbeat economic numbers out of both regions, and that's going to provide justification for their central banks to commence rate cuts in June. So that's going to be something to watch also this week, especially the ECB on Thursday, which should have a relatively dovish forward guidance for their June meeting.
Yeah, we've been seeing the push-pull of all of that play out in the FX markets as well. Charlie Babrinskoy and Adam Crisafulli, thanks for kicking off the hour with me.
Thanks for having me.
As the Dow finishes the day basically unchanged and the S&P in a similar position, up just about 0.1% as we do await that key inflation reading tomorrow. Well, NVIDIA shares were a weight on the S&P today. Those were under pressure as Intel unveils its new AI chip. Christina Partsenevelis has the details. Hi, Christina.
Hi. Well, Intel taking direct aim at NVIDIA with its Gaudi 3 AI chip. CEO Pat Gelsinger was not shy today in his keynote when comparing Intel's latest chip with NVIDIA's H100 chip, which is the main choice among company building AI systems. Listen in.
Gaudi 3 is great on benchmarks versus the H100 on top Open Llama models, 50% faster on time to train, 50% better on inferencing, 40% better on inference power efficiency.
Not shy indeed. He did went on to say that this chip is going to be available through original equipment manufacturers such as Dell, HP, Lenovo, and Supermicron as early as Q2 of this year. Intel also promising, this is the interesting part, that it's going to be at a fraction of the cost. So I asked Intel CEO Pat Gelsinger about this cost comment on a media call maybe just a few hours ago, and he said it was, quote, not a little below, but a lot below NVIDIA's offering. They don't actually provide particular numbers when it comes to pricing, though. So they may win on cost, but Intel still has a lot of software and ecosystem work to do in order to push out NVIDIA. And I say that because NVIDIA holds roughly 80% of the AI chip market, according to analysts. Lastly, Intel's latest AI chip is benchmarked with NVIDIA's chip already on the market. That would be the H100. But NVIDIA is currently launching an updated H200 GPU chip this quarter and has its next generation Blackwell chip shipping in maybe Q4 of this year. So we won't know how Intel's AI chips stack up until NVIDIA's new chips come to market. But that hasn't stopped Intel shares from moving a little bit higher today, especially when other names are taking a breather. And I know NVIDIA is one of them, down 2%.
Yeah, and I just, to stick with that theme here and the fact that you do have Gelsinger making these direct comparisons between NVIDIA's current chip that's on the market and Gaudi 3 that's going to release later this year. I mean, yes, NVIDIA has 80% market share, but I think about AMD and what Lisa Su has said to us about how much this market's going to grow. So maybe 80% of current market share, but it raises the question, if that's a growing number, is there truly room for everybody without necessarily eroding what NVIDIA already has in terms of business and in the pipeline right now?
I'll reiterate what a lot of hyperscalers are saying, and that's exactly what AMD's CEO is saying, is yes, the market share is there, which is why hyperscalers like Amazon, Google are coming out with their own in-house custom chips. They seem more than willing to say, hey, there's enough demand for all of us. At Google, the latest today, also announcing a new ARM-based processor that would compete with NVIDIA, so it's another custom in-house chip. That was part of the reason why you saw NVIDIA shares down. So you got Intel, Google. I was in Texas not too long ago at Amazon's lab. They said that although they work with NVIDIA, at the same time, they're creating their own in-house chips. So according to them, there is enough market share, but I do wonder in the next 1 to 2 years when companies realize the revenue monetization of spending so much on these chips, you know, hundreds of thousands of dollars may not be there. And so then you might see that demand start to drop when we're not seeing that productivity and that revenue come in to offset those costs.
Okay, we'll have to see. Christina Partsinevelos, thank you.
Thanks.
We got much more on Intel still to come when a top analyst tells us what this new chip means for the stock and for rival NVIDIA. But it's time to bring in senior markets commentator Mike Santoli for a look at another mega cap tech name, Amazon. Its run toward a new record close, which we didn't exactly get today, Mike, but we're on watch for it.
No, Morgan, we didn't. And in fact, it's been quite a long wait, especially relative to the other major big growth names. Amazon here over a 5-year period compared to a couple of its fellow Dow Industrial members here. You see the orange is Amazon, and this is the all-time high that we're trying to get back to way back in 2021. So you remember the massive move in the heat of the pandemic that Amazon had. It's been working off that for quite some time. And these are kind of mirror companies to its main businesses, obviously. So Microsoft, in terms of cloud services, especially before the OpenAI thing became the animating force right around here, I do think that was a pretty good comp. And then, of course, Walmart as sort of dominant retail. Now, on the valuation side, what's kind of interesting, a lot of analysts and investors are excited about Amazon's ability to produce more free cash flow and be more disciplined on cost. This is free cash flow yield. So this is essentially the inverse of the price to free cash flow. It's what you're getting if you're a shareholder in the form of free cash flow profits. And Amazon now nosing ahead of both Walmart and Microsoft. Now, Microsoft's been going down mostly because the stock's been doing so well and getting more expensive. The valuation premium has been building up, whereas Walmart, similarly, although, again, it's also having a little bit of a flatter period in terms of stock performance, Morgan.
This is really fascinating to me. Why are you seeing free cash flow yield nudge up with Amazon versus the other two? I mean, is it fair to make a comparison to Netflix versus the media companies that are also heavily investing and looking to build out their own streaming platforms, this idea that maybe it's just a little bit further ahead in some of its key businesses?
I would say to a degree, yes. Now, the question with Amazon has always been, will it choose to essentially harvest a lot more free cash flow? Because it really could have all along been managing itself in that direction, whereas they'd rather reinvest and, say, make the experience better and all the rest of it. So it does seem right now they're at a point of maturity where the company feels as if, yeah, we can kind of do it all. The scale is there, and they have really slashed a lot of their expenses. They came through a huge investment period, and I think this is to some degree harvesting. Now, I will say this is a forward free cash flow yield, which means this is what the street thinks they're going to get to, and it's notoriously tough, even on a 3-month basis, to figure out exactly how much is going to fall to the bottom line at Amazon. So you got to take that as a disclaimer along with it.
The everything store, the everything stock, I guess.
Yeah.
All right, Mike Santoli, we'll see you later this hour. Alphabet hitting a 1-year high today as well after unveiling a new server chip, as Christina mentioned earlier, as it takes on Amazon and Microsoft in the cloud infrastructure industry. Up next, Wedbush's Dan Ives gives us his take. He's here. And later, Golub Capital's CEO on a new survey showing which sectors may be the big winners and losers this earnings season. We got a big hour. Stay with us. Overtime's back in 2.
Okay, everyone. Thanks for watching my channel. Right now, let's take a look on my option strat, see how we did it on today returns. Okay, today returns, we have Boeing plus $28, 25%. BlackRock still down almost like 100%. Disney, closing up 30% on my play, so I'm pretty good. Hood, I'm down 80% because Robinhood probably didn't didn't do much today. Probably went down. Yeah, went down 1%. That's okay. Let's see tomorrow with whatever. Every single time has what they call some type of number like CPE, PPE, GPE. Actually, everyone's important, and they kind of push for that. So I didn't have over here my play on the JP Morgan, but I have the TSM, which is sometimes good and bad, and not to look at the play because the put, the call early was paying pretty good because it went up to 147, and I was taking a look at probably would have pay off because they didn't try. It was 160. I want to be positive $70. Right now I'm negative $77 with 48% loss. That was TSM. So, and UVXY, it hit high on intraday, but then it dropped during the, let me see here, UVXY. Like 3 minutes. So yeah, it hit like almost $7 actually right here in the morning. 717. Hit 713. Close 716 was the high. Yeah. So then kind of like short down. If you look in the weekly, I don't know why this is happening, but in the weekly chart, we're gonna see the split on the 11. So let's see the date chart. The date chart kind of like right at what I'm selling, showing to you guys before was those two big blocks over here. But I keep saying that my analysis is because I'm thinking that what's gonna happen is when this reverse split happened 5-1 and 11, the computer is not gonna understand it was reverse split. Plus tomorrow we have the PPE or CPE, whatever it is, for the inflation, and I think combined with that tomorrow and the next day, so we're probably gonna see some correction in on the SPY, DIA, and the QQQ, which Dow Jones, SP 500, and the Nasdaq. So I think that's my point of view that I'm looking at right now. That's what's gonna happen for this week. That's the reason I'm still holding this for the 19. I jumped to $11 call, which is gonna be translated something. So 5-1. I don't even know how they're gonna do the math in this, but this strike is gonna change. It's gonna change for next week. I don't know which one's gonna be. It's gonna change for the 12. So I don't know. So down at 66%, but I'm betting on the inflation number and also the this being changed, because also what happened is every time the price went up in UVIX, it's they build somehow a way to go on the VIX to go how can I say, the bull market to push up, because I remember that UVXY and VIX went down to something, I think VIX was 13, 14, whatever it is right now, and the UVIX was like $4, and then for 4 it went to 40. And when this happening, what's pretty much like in timing for the market, there was like a bottom and then pops up big time and then went up to a almost like all-time high from, because then the UVIX can go to 40 to 4 again, or 7 or 8, whatever, and they split it again. They go, now if you keep in the $6, you're gonna go to 30, and then the 30 to down again and the 6. So that's kind of like the indication for a bull market. That's the reason you have some advisors that they're gonna say the SP 500 go to 5,500. Right now it's 5,200, but before that it's gonna correct it to maybe 48, 46. So I think in the correction of 46, 48, that might be either the reverse split right now for UVIX, or the reverse split for VIX to the VIX. I don't know if they're gonna have any. It didn't show here any split on the VIX right now, so pretty much just the UVIX kind of split, reverse split. So in the VIX trading at this moment at 15. So I believe that also when the UVIX did it what it's supposed to do in a reverse split, the VIX gonna go higher. I don't know how much. Right now it's a big heavily bear that I'm seeing over here. Let me show it to you guys. So this is the VIX. This is like a really short, big blocks over here, shorting the price. As you can see, I hit it here on the top and then all the way down to the bottom. The bottom at $11, $12, and try to go up to 16 in this candle over here, 16.92 on a high, and then kind of corrects a little bit. But I think that we're gonna see this going up, and this block's gonna disappear. As far as I'm concerned, this is the day chart. So this is the day chart, and when this happening, the price is gonna go up. Okay, so I'm gonna update for tomorrow in the afternoon, because I work in the morning. I'm gonna have a morning session, but pretty much that's kind of like the place that I have on my Robinhood account. Also, I think let me add one that I remember from my head. It's a long put. I did a delta at 43. Just can't remember how much I paid, but I think I play. Let's put like $45. I do save the trade, and it's ER earnings. So why I did delta? Let's go here. Especially if the number is bad tomorrow, inflation. I think. Oops. Yeah, that's kind of like the reason I did delta. See, in 3 minutes, kind of like show is heavily short position. I didn't see this today, but actually today somebody thinking that the price might go up. Blocks from buy just print here in the 3 minutes, and also print on the 5 minutes, which is kind of like it show me a little bit what is the direction with the stock go. So if it go up to 47 or something like that, actually right now it's trading at 47. It went up 0.66%. It dipped to the bottom at 46. This probably would have paid me pretty good, but then I didn't want to take a look on my cell phone again. Hit like support over here, 2 supports, and then went up again and build these blocks towards the end of the day for the buy position. Let's see why. Let's take a look on the flow, and let's go here and flow. Let's take a look, see how they are. Okay. So right now they are bearish on delta. which is we have 8 plus position, but 12 sell positions or shorting positions on Delta, which is, I think, that could be this one. Let me show you. Let me put both together. See this work. No, it's not gonna work. Better this one. Okay. So on the left is the chart for Delta, and we're looking at 3 minutes. Of course, I really don't like the 3 minutes, but as far as I'm concerned, it kind of show me pretty much what's happening. So we have Delta bearish right here, as you can see on the option strat for the earnings tomorrow. And as you can see, this is big blocks and sell. 2 big blocks kind of even kind of pushed the price down at the opening today from 40, hit high on 47.49, push all the way down to 46, just $1, which is not a 2-digit. It could be probably something around 5, 10, almost 20% down. Yep. So then it went up again and hit over here. So my put would have paid pretty good over here because, you know, I got the 43. So as a matter of fact, I can take a look and tell you guys how much it would pay during the day. My put, I think it's 43. Okay. And in the morning, let me see here. Let's do the 15 minutes. Yeah. I'll be open this morning somewhere. Let me see. Kind of hard to see it, but I would say $50. Yeah. Today's 9. Well, whatever. Yeah. I'm thinking more than that. I don't know. I think I'll pay more than that. I'll take a look. I think I want to have 47 put. Yeah. I don't know. I had to double check. Anyway. So, yeah. 30 minutes. We're in a closing bell at CNBC. You guys took a look at the closing. Today, the only earning was, if I go upcoming earnings, take this off, and okay, I didn't show here, but there was the WD 40, which is, they didn't have nothing. No bats, neutral, but actually it went pretty bad. Let me show you guys. Sorry, actually not that bad. Hit like support, and support, but down some. It was down almost 6%. Now it's up. So now it's down 3%. See how it goes for tomorrow. You know, just if you're gonna go bad in the numbers tomorrow. Anyway, guys, that's the earnings for today in the WD-40. Thanks for watching my video. Please subscribe to the channel. I'm gonna post this over there on StockWits. And if you take a look, if you have some insights, let me know. I'm gonna try to improve with information and everything that I do and everything that I see on the StockWits. You know, sometimes I got some interest messages or pop up from interested people that I follow, and sometimes good, sometimes bad. Like my place, and right now I'm deep in boo-boo territory. But it is what it is. Let's take a look and let's see tomorrow how it goes. Thanks for watching the channel and see you next time.